Yo, what's going on, guys? We're actually going over four REITs in this video. And as you know, REITs are loved by dividend investors because they have to, by law, pay out 90% of their taxable income in the form of dividends. So they have these abnormally high dividend yields. So, as you know, dividend investors love these. And I've carefully selected these REITs so they have low debt because REITs really get hit in high interest rates environments like right now. And these have low debt and they also don't dilute you as a shareholder. So, a lot of REITs like Realty Income do that, but these REITs don't. So let me actually show you the first REIT, which is ticker symbol IIPR. So here is IIPR. This is Innovative Industrial Properties. And look at the stock price. The stock price hasn't done that well. It's at like the 2019, 2020 levels, but the dividend yield right now is 9.68%. And let's go check if it's sustainable. And obviously it is because it's on the list, but let's actually first check out the dividend growth here. Now, they didn't raise it in the most recent quarter, and that's because they're happy with $1.80 right now, because that's roughly a 10% dividend yield. So they're not actually raising the dividend yield right now, but let me actually show you the numbers. So first off, their balance sheet for a REIT, I've never seen a better one. They're only 18% leveraged. And if we go up here, look at their net income, up 10% year over year. So check this out. I really want to get this in your head, all right? So look, 1 year ago their assets were 2.43 billion. Now they're 2.39 billion. So the same amount of assets, the same properties, and they're generating 10% more net income. So they're getting more profitable, more ROIC. And as we know, we don't really want to look at net income. We want to look at core FFO. And the core FFO, which is this number right here, is still up 11% from 1 year ago. So $63 million. So let's see how much their dividend costs from that. So their 10% dividend yield only cost $51 million. And this is in line with their 90% tax rule. So they pay out 90% of their taxable income in the form of dividends. So they paid out $51 million, giving you that 10% dividend yield. Here's their normalized diluted EPS. But let me show you this. So look, their total debt is literally only $300 million. And let's check their cash on hand. They have $117 million of cash on hand, and that's up 52% from 1 year ago. So that's really good in my opinion. And this is my favorite part. If we go to the total common shares outstanding, they haven't been diluting you. It's only up 0.24%, so basically nothing. So that's my thoughts on IIPR. I think it's a really good deal, and it's a 9% dividend yield. Oh yeah, I forgot. I own 3 shares of this in my Weeble portfolio. It's not much at all. But anyway, that's the first REIT. Let's actually get into the next one. All right, guys. So the next dividend stock is ticker symbol NSA, or National Storage Affiliates. And look at this one since 2020. It's at the same 2020 pandemic prices. And let's look at the dividend yield. It's 7.44%. So no one can complain about the dividend yield. And look at this. They just reported earnings. So we get to go look at what they did in the most recent quarter. Let me tell you, the earnings were quite good. But there is one little concerning thing that I want to point out, and that's the reason why the stock has fallen so much. Why has the stock fallen so much? It's because of this ratio right here. You see how 1 year ago it says 59%? Well, now it's 65%. So that means their amount of debt to assets is going up. But anyway, if you look at their core FFO, $129 million, it's up 5.29% from 1 year ago. So that's really good, $129 million. And their 7.5% dividend yield only cost $52 million of that. And you guys are going to be surprised. Look at their stock buyback program. They bought back $213 million worth of their own stock in the most recent quarter. So look at the total common shares outstanding. It's down 8.7% from 1 year ago. And remember, the market cap is under $3 billion. So yeah, they literally bought back with this like 8% of their total common shares outstanding, which is absolutely nuts. Yeah, from 1 year ago, it's down 8.7%. So from 1 year ago, you now own 8.7% more of the company. So that's why I really like when companies do stock buybacks, but we can see how interest rates are affecting this company because this is the amount of interest they're paying. As you can see, 1 year ago, they were chilling. It was only 26 million. Now it's 41 million. And for a small cap, that is quite a difference. So that could be a potential reason why you want to stay away from NSA is the debt. But anyway, let's get into the next REIT. All right, you guys. So the next REIT is really popular. Everyone knows this one. It's ticker symbol Vici, or Vici Properties. And the stock price is flat from 1 year ago. Check this out. It's basically where it was 1 year ago. But if we zoom out, it's definitely above its 2019 levels. And if you include the dividend, let's say you've been holding for that whole time, you're definitely up on your position, because right now the dividend yield is roughly 6%. It's 5.91%. No one is going to hate that. But let's check out the dividend growth on this one. So they just rose the dividend from 39 cents to 41 and a half cents. And in 2020, this sucker was only it was under 30 cents. It was 29 cents. So yeah, that's quite good growth for a dividend stock that's yielding 6%, and it's yielding 6% at these super high prices. Like if you waited for it to come down to right here, which hey, it might not ever go down to right there because the interest rates haven't been affecting them that much. But anyway, let's get right back into it. So look at their net income. Look at all these green numbers right here. It's up crazy from 1 year ago. And if we look at their balance sheet, it's only 42% assets to liability ratio. So that's really low. It's very under control, and I like to see that. But we actually want to look at their core FFO, and it's up 9.47% from 1 year ago, $552 million. So $552 million. And from that, their dividend only cost $382 million. So they can easily afford that and even raise it if they wanted to. How much interest are they paying? 198 million. That's kind of crazy. But if we actually go to their total common shares outstanding, you've only been diluted 5.58%. Remember, it's not that bad because they can easily afford the dividend. And if you look, the total common shares outstanding are up 5.58% from 1 year ago, as we just looked at. And if you go to their actual assets, they went from 37 billion to 42.8 billion. So that's more than a 5% growth. So being diluted 5% and gaining more than 5% assets is a net positive for you, the shareholder. So in my opinion, Vici is a really safe dividend stock, and I really like the properties that they actually own. Have you been to any of them in Las Vegas on the Las Vegas Strip? They own some of the most popular, most famous properties. Well, they actually own the land, that it's the triple net lease strategy. Anyway, that's for another video, but that's Vici Properties. Let's get into the last and final REIT. All right, you guys. So here's the last REIT. I had to include Prologis on the list. It's the largest market cap by REIT. And you see this red line right here? That's where it's at. It's slightly above the 2019 levels, but it is a really good deal right now because the dividend growth on this one is insane and they can most definitely easily afford the dividend. And I was so tempted to buy some shares today, but I'm going to hold off. I'm going to try and get it under 100. I don't know if that'll happen though, so that's risky, but I really want to buy some Prologis. So check this out. The dividend yield is 3.4%. But first, let me show you the dividend growth because the dividend growth on this one is insane. So in 2 quarters, they're going to raise their dividend to like something in the 90 cents. But anyway, in 2020, it was only 58 cents. Then it grew to 63.79. So who knows? In a year or two, your yield on cost will definitely be over 4%. So it's yielding 3.4% right now, but in a year, your yield on cost will be like 4%. But anyway, let's dig into their actual numbers. So here's their balance sheet, 36%. That's very safe. And it went up from 1 year ago like crazy because they merged with another REIT called Duke Realty. But anyway, let's look at their operating cash flow. And this is the most insane part. It's $1.97 billion in the most recent quarter. That is an insane number. And they didn't sell any assets or anything. Look, their assets are the same from last quarter. They just got super profitable. So look, $1.97 billion. How much does their dividend cost of that? Actually, you know what? Let's give them the benefit of the doubt. Let's say it was last quarter. Let's say they made $1.22 billion, okay? They obviously made more, but their dividend only cost $806 million from that. So that's why they're able to grow it so much because the dividend doesn't cost that much. And we can see their total debt of $27 billion, cash on hand, $740 million. Their interest expense is basically nothing. Let's see, what are they doing to you, the shareholder? Are they diluting you? Nope. If we see it from the past 4 quarters, remember they merged in a stock merger. It's basically the same from a couple quarters ago. It hasn't gone up like crazy or down. But the fact that they're not diluting you, like, look, it's blank because they haven't been issuing any shares right here. But yeah, that's Prologis. I think this one's going to have some insane dividend growth to it and a lot of influxes from institutions because out of all the REIT ETFs, this one's always the largest holding in all the REIT ETFs. But anyway, I hope you guys enjoyed this video. If you would, don't forget to hit the like button. I always forget to mention that during the video. And if you're wondering what app I'm using to analyze these stocks, it's called Webull. And if you want to download it, I really would appreciate if you use my affiliate code in the description. But I hope you guys have a fantastic rest of your day. My name's Nathan Robert. I'll catch you guys in the next video.